Good afternoon. Today is Friday, January 29th, 2021. This market commentary title is The Traditional Late January, Early February Dip, and this is your market report. Hey, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what is happening in the actual stock market. Our goal is to close the gap in communication between clients and the actual person that is managing their assets. We use a combination of fundamentals and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. A friendly reminder, this video is not to be taken as financial advice. Should you have questions, feel free to reach out to us through email or social media comment section. The FAQ section within our website is a great way to get insight into our philosophy and how we manage assets. Check it out if you wish to stay updated, and please subscribe. So let's get into the charts and we will hit the ground running. Okay, so as you can see, it's an ugly week. Like we've talked about, this is often it happens in an inauguration year, end of January, early February. So this is normal stuff that's happening. It's not fun, but we currently clients have between 50 to 45% in cash. So we are in very good spot. I reduced positions on Wednesday into some of the rally. So we are in a pretty good position here. You're never going to time it perfect, but we are still, from a risk reward standpoint, this is exactly where I want to be. So let me reduce the screen so you can see this a little better. One second. There you go. So you can see the week, not a fun week, okay? We're not trying to hide that, but we minimize the downside. That's the goal, and to do much better on the upside, and we will buy this dip. So if we're showing you this is what we've been showing clients for a while now, and to say, hey, the market doesn't often, it basically often rhymes, but it does not always repeat. So if we're looking at this chart, take a look here. It's very interesting. I have a lot of things going on at the same time, so that's why it's going to take a little bit longer. So as this pulls up, hopefully, there we go. So this is comparing the chart between 2009, 2010, the last big dip, and rally to 2021. This would not surprise me, okay? So again, it would be unfortunate if we go down 8%. I think we're down like 4 or 5 at this point. But understand that we have 3% in cash, so that'll reduce half, hopefully. And so I will need to start probably this next week if we keep going lower, start to add. The key level 37.60 did break. That is a sell more position for me. If we get back above that, that would be ideal. But the wind is not behind us at this point. We got to be careful, okay? So there is that. Let's get into some of the charts. We'll make this quick and to the point. Listen, I hear all the crap that's going in the media. Understand the media, despite what they're acting like they're trying to help the retail investor, often is one of the biggest manipulators of the entire system. Okay, so again, anything that can cause this division, black versus white, red versus blue, from a political standpoint, and also rich versus poor, they are going to hit that story. So that's what this is about. That's what you're seeing in the news, at least. You're hearing about GameStop. It's annoying, but we got to work through it. Look at price action. It's a storybook. I mean, it's a great, interesting story, interesting case study. Somebody is going to get drilled for manipulation likely, but congratulations to those who did well in it. And there's no, I have no problem with anybody doing well in a GameStop, an AMC, many other names, Nokia, that had high short interest. If you're getting into these names now, you better know what you're doing. Okay, you're seeing 50% swings within a 10-minute period. You also better know what a short stop limit is. You also better understand how to hedge yourself when the market is closed, because that's when a lot of these moves are happening. That's enough of this story. But be careful how much news you're watching. because it makes it seem a lot more dramatic than it actually is. And COVID has really gotten people watching news even more, which is truthfully probably not a good thing. So we'll get into the charts and we will go from there. So first chart, we continuously show this chart. Okay. The internet is quite slow, so hang in there. I'm going to blow this up a little bit more. There we go. Okay. So, as you can see, the blue line has not crossed the gold line. If those two cross, that's an even bigger problem. I don't foresee it lasting long, but the price action is well below. So, we are definitely oversold here, but, well, I shouldn't say that. We're not oversold quite yet. We could go much lower, but it's near out of the cloud, which often presents itself an interesting opportunity. So this is not good price action. We have to be real about that. It's not a fun day by any means, but we are not. I feel good about where I stand with 45 to 50% cash and some accounts even more. So I'm never going to time it perfect, but we're, from a risk reward standpoint, not in a bad position. These are the levels we've been talking about for 2 weeks. Okay. We've talked about these key levels right here. Support levels, 37.50. That broke. I sold even more. So I was, I believe, around 73% invested, reduced significantly, prevented a nice dip, even more. So we are testing the 37.10 to 37.20 area as we speak. We did touch near the 36.90 right there. Okay, so these levels help to know, and I'm watching very, very closely from a technical standpoint. Okay, so we have a game plan. Don't be surprised if I have to start adding next week if we go lower. Again, nothing has really changed from an economical standpoint. The market is not the economy, so we have to pay attention to price action. So there's a lot of crap going on in the news. The market is responding to that news, so price action is following that, so I will react accordingly, okay? So that's where we stand there. Next chart, put-call ratio. Finally, we are getting out of, this is Thursday, so that did not, it's not updated yet. So we had a decent day yesterday, so the put-call ratio was near 40, but this is definitely likely to spike. So there's definitely has been some complacency in the market. Let's be real about that. But it's interesting to pay attention to those things. Volatility, we had a huge spike in volatility. Okay, it's something to pay attention to. Above 30 is not a good thing. Okay, we are at 33.71 as we speak right now. We went to 30. We actually had one of the highest intraday moves in the VIX right here, this huge green candle that we've seen since like 2018. So that was bought the next day, but we're seeing the typical volatility that you see. So we got to be careful. We don't want to see the VIX above 30. I'm well aware of that. The 10-year treasury, we've been watching this to say, hey, usually into an inauguration, interest rates do go up. The yields go up. That is happening. Kind of interesting. Oh, shoot. 1 second, please. Stocks above the 200-day moving average. And really struggling. Sorry, there's a lot of things running right now. It's trying to bring it up, actually. 1 second. Sorry about this. So this is as of Thursday, so still pretty hot. I mean, you're seeing that we were pretty extreme overbought at one point. Net asset exposure, net asset, net active management exposure is still pretty high. This is as of Friday. It was well above 100. We're now at 83. So we're coming down. This is good. McClellan Index. This is not good. We don't want to see the breath like this come down. Now, you're seeing it was a high level here. Does it surprise me if it goes a little bit lower? Not really. Got to be honest with that. So the next couple weeks, I'm going to slowly be adding. It's got to happen. We are not going to get caught with another rally, which again, the backdrop is still strong. Nothing has happened there. This is typical dips within a bull market. I don't expect anything else to occur. So we're in a good spot for that. Just to kind of show you perspective with the NASDAQ, it's not pretty. I mean, below the trend, it needs to reverse very quickly. I mean, you sometimes get a little below the 20-day moving average, but it has not been pretty. We have to be real about that. Russell 2000 versus the S&P 500. Little down movement here, but still the breakout. I expect to be buying some small caps. I need more exposure into small caps. I don't have a lot of exposure there on this dip. So we've had a nice little dip to take advantage of. Different stocks that I'm not necessarily too interested in, but some I am interested in. I'm just kind of watching general trend is basically what I want to get at. So first one, Tesla. You can see a nice little dip here. It was very strong going into earnings. I don't like when something is rallied this much into earnings. We've talked about this. Not great risk reward. Now it's getting into a much more interesting area. Now, look, typically, does this test the 50-day moving average? It could. I mean, it's a religion stock, but it doesn't mean it's inevitable. Okay? So momentum is getting hit here. So some stocks that I'm watching, Deere, which has been in trend, you can see that it's not absolutely dying here, which is kind of what you want to see. Stocks that hold up decently during these dips. IBB, Biotechnology Fund, also holding up decently as well. IHI, Medical Devices, also holding up well. You have to be watching the things that are doing well on dips. TAN, which is solar names, getting thumped. But I expect this to be dipped, to be bought, excuse me. I wouldn't be surprised if this potentially touches the 50-day and gets bought again. So you're seeing some things are in trend more than others. That's really all we have for you today. Hang in there. Ignore the news. It'll put you on edge, make you lose your mind. Go outside for a walk. It's better for you. We will be watching closely, and don't be surprised if we start adding next week. I might have to into the close if it goes low enough. Right now, key levels are not holding, so I don't want to add or reduce at this point. The names that I have, I feel very comfortable holding even if it goes lower. Okay, so it's getting to a point where we need to start adding very soon, but not seeing it yet. Might add a little bit into the close, but we'll see. Thanks for your trust. Have a great weekend.